Hi everyone, I hope you're all doing wonderful today. I am the Portfolio Panda. Today, we'll explore everything you need to know about how credit cards work, how to pick the right one, the difference between credit and debit cards, the concept of a grace period, who qualifies for a credit card, and the benefits of using credit cards. So, let's dive right in. How does a credit card work? Let's start by understanding how credit cards work. A credit card is a financial tool that allows you to borrow money from a bank or a financial institution to make purchases. Instead of using cash or a debit card linked to your bank account, you can use a credit card to pay for goods and services. When you make a purchase with a credit card, the credit card issuer pays the merchant on your behalf. You then owe the credit card issuer the amount you spent, plus any applicable interest or fees. It's important to note that a credit card is essentially a short-term loan, which you are expected to repay within a specified period, usually on a monthly basis. What's the APR? APR stands for annual percentage rate, and it represents the cost of borrowing money on a credit card on an annual basis. It includes both the interest rate and any applicable fees associated with the credit card. The credit card APR determines how much interest you will be charged if you carry a balance on your credit card from one billing cycle to the next. It's important to note that APRs can vary between credit cards and can also vary for different types of transactions, such as purchases, cash advances, or balance transfers. Here are a few key points to understand about credit card APR. Fixed versus variable APR. Some credit cards have a fixed APR, which means the interest rate remains constant over time. Other cards have a variable APR, which can change based on market conditions, such as fluctuations in the prime rate. Introductory APR. Many credit cards offer introductory or promotional APRs, which are usually lower than the regular APR. These promotional rates may apply for a specific period, such as 6 months or a year, and are often offered to attract new cardholders or for balance transfers. Purchase APR versus cash advance APR. Credit cards typically have different APRs for purchases and cash advances. The cash advance APR is usually higher than the purchase APR, and interest starts accruing immediately on cash advances without a grace period. Grace period and APR. If you pay your credit card balance in full before the due date during the grace period, you can avoid paying interest on purchases. However, if you carry a balance forward, interest will be charged based on the APR. Penalty APR. In cases of late payments or other violations of the credit card agreement, the credit card issuer may apply a penalty APR, which is a significantly higher interest rate. It's important to make payments on time to avoid triggering the penalty APR. Remember that the APR does not include any additional fees, such as annual fees or balance transfer fees, which can also impact the overall cost of using a credit card. It's essential to review the terms and conditions of your credit card agreement to understand the specific APRs and fees associated with your card. Overall, understanding the credit card APR is crucial for making informed decisions about borrowing and managing your credit card balances. It's advisable to pay off your credit card balances in full each month to avoid interest charges and minimize the overall cost of borrowing. How do I pick the right credit card? Now that you know how credit cards work, let's discuss how to pick the right one for your needs. When selecting a credit card, consider the following factors. Credit score. Your credit score plays a significant role in determining your eligibility for different credit cards. Lenders typically offer better terms and rewards to individuals with higher credit scores. Interest rates. Compare the interest rates offered by different credit card issuers. Low interest rates can save you money if you plan to carry a balance on your card. Fees. Review the fees associated with the credit card, such as annual fees, late payment fees, and foreign transaction fees. Choose a card with fees that align with your usage patterns. Rewards and benefits. Some credit cards offer rewards programs such as cashback, travel rewards, or discounts at specific merchants. Consider your spending habits and choose a card that offers rewards you can maximize. Credit card terms. Read the terms and conditions carefully, including the credit limit, grace period, and any promotional offers. Ensure they align with your financial goals and responsibilities. What's the difference between a debit card and a credit card? Many people wonder about the differences between debit cards and credit cards. Let's clarify. A debit card issued by your bank allows you to spend money directly from your bank account. It deducts the purchase amount immediately, so you can only spend what you have available. On the other hand, a credit card allows you to borrow money and pay it back later, subject to interest charges if not paid in full. Understanding the grace period. The term grace period often comes up when discussing credit cards. Let's shed some light on it. A grace period refers to the period of time between the end of your billing cycle and the payment due date. During this time, you have the opportunity to pay off your balance without incurring any interest charges. Grace periods typically range from 21 to 25 days, but it's essential to check your card's terms to understand the specific grace period offered. Who qualifies for a credit card? Now, let's talk about who qualifies for a credit card. Qualification for a credit card depends on various factors, including your credit history, income, and age. Here are some general guidelines. Credit history. Lenders assess your credit history to evaluate your creditworthiness. A good credit history, with a demonstrated ability to repay debts responsibly, increases your chances of qualifying for a credit card. If you have limited or poor credit history, you may need to start with a secured credit card or a card designed for building credit. Income. Credit card issuers typically require proof of income to ensure you have the means to repay the borrowed funds. Higher income levels may increase your chances of qualifying for certain credit cards or obtaining higher credit limits. Age. In most countries, you must be at least 18 years old to apply for a credit card independently. However, some credit card issuers may have a higher age requirement or allow individuals under 18 to have a credit card as an authorized user linked to a parent or guardian's account. Legal status. You usually need to be a legal resident or citizen of the country where you are applying for a credit card. Some credit cards may have additional requirements for non-residents or international students. It's important to note that meeting these criteria doesn't guarantee approval for a credit card. Each credit card issuer has its own approval criteria and may consider additional factors during the application process. Why should I use credit cards? Finally, let's discuss why you might consider using credit cards. There are several benefits to using credit cards. Convenience. Credit cards offer a convenient and widely accepted method of payment. You can use them for online purchases, in-store transactions, and even when traveling abroad. Building credit history. Responsible credit card use can help you establish and improve your credit history. Timely payments and keeping your credit utilization low can positively impact your credit score. Security and fraud protection. Credit cards often come with built-in fraud protection measures. If unauthorized charges occur, you can dispute them, and you are not held liable for fraudulent transactions. Rewards and perks. Many credit cards offer rewards programs, cashback, airline miles, or other perks. By using credit cards for your regular expenses, you can earn rewards that can be redeemed for travel, merchandise, or statement credits. Emergency funds. Credit cards can serve as a financial safety net during emergencies or unexpected expenses. They provide immediate access to funds, which can be helpful in urgent situations. However, it's crucial to use credit cards responsibly. Paying your balances in full and on time, managing your spending, and avoiding excessive debt can ensure you maximize the benefits without falling into financial hardship. That wraps up our comprehensive guide on how credit cards work, choosing the right one, the difference between credit and debit cards, understanding the grace period, who qualifies for a credit card, and the advantages of using credit cards. We hope this information helps you make informed decisions and use credit cards wisely. Remember to always consider your financial situation and goals when using credit cards. Thank you for watching. As usual, let me know any questions in the comments below and make sure to share this with your least financially savvy friend, then tell me if I did okay in explaining the topic. Your most valuable asset is your time. Thank you for sharing yours with me. Until next time.